All right, good morning, trade pros. Welcome to a historic morning market update. I didn't have time to set up the cameras to face the workstation because that's not what's important this morning. We got a lot of ground to cover on this morning market update. First and foremost, the title of this video is Stock Markets Crash and Oil's Down 30%. All right, people are going to say it's not a crash, it's just a healthy correction. I've heard it all before. So let's talk about, first and foremost, what's leading this downside. The media is going to make you believe it's coronavirus, right? Coronavirus is the reason the market's down. Human beings, we're always looking for the reason for anything. We have a hard time accepting that it's not just one reason, it's a multitude of factors weighing in at the same time. All right, we've had overstretched evaluations of markets for a long time. All right, the markets have been boosted more by the Fed than the economy's grown. So we've had a really big economy to market gap for a long time. And so this whole time, we've had a whole bunch of dynamite in a room, but we never had a match. And so the coronavirus was the ignition source for this downside. But it is not the only reason that this market is sliding. All right, the other factors are weighing in, and now the market's being discounted from super high valuations to begin with. I have a term I always yap about in the trading room: markets don't crash from lows, they crash from highs. And so here we are. It's an unfortunate event because this reminds me back to 08, 09. I was at the trading desk seeing people get beat up, and this was the foundational principle behind what we're doing now at TRADEPRO Academy, is to help people. And so help we did. Our trading room last night absolutely smashed it, right? And there's more opportunities. So let's talk about today. First of all, the futures are what's called limit down. What does limit down mean? In any given overnight session between 6 p.m. to 9:30 US, markets could only drop 5%. When they drop 5%, currently that level is at 28.19. What happens is a floor level is established. So you could bid the 19 to buy at market, or you could offer to sell it at 19, but you can't drop below 19. 18.75 won't trade on the bid. So what that basically means is if you're long, you're stuck long until you get a market seller. At the moment, all market sellers are jumping on the offer. We don't know where this is going to open. This thing could free fall 30, 40, 50 points, depending on what the auction process looks like at 9:30. 9:30 a.m., this 5% overnight limit or a floor that's capped at is released. It's kind of like a circuit breaker or a fuse, right? And then what ends up happening is there's more limit down rules. So we could now trade below 19 as of 9:30. But there are other limits. If we hit the 7% fall from the prior day close on Friday, it's not based on where we opened on Sunday. It's based on where we closed on Friday. So if we add another 2% of downside off this open, the market halts for 15 minutes. It doesn't stop. There's no floor. It halts for 15 minutes. If it drops another 5% on top of that, or 13% in total from the Friday close, the market halts yet again for another 15 minutes, right? These halts are active anytime before 3:25 p.m. Eastern. If the market reaches a 20% decline, which at this point is 23.78 on the market, all right, or about 300 and something points lower, which, is it going to happen? I'm not going to say with certainty, but it could. I feel like at this time, there's a lot of panic selling that's about to happen. So be very cautious. I would not be buying this. Yeah, let me be clear. This isn't a buying opportunity yet. This knife is still falling. We don't know how much lower it's got to go. This isn't the place to stick your neck out and get long. You could get annihilated. All right. If we hit the 20% downside trigger for the day, the market closes essentially. It will no longer be open. That's it. We're done for the day. 20% is one hell of a decline for an under 12-hour period. So here's the dynamic that's causing this. Think about being somebody with cash at the moment that's looking to buy. I'd love to see this in the YouTube comments. All right. Would you be buying right now, this very moment? Okay, would you be buying this? We'll talk about why the market's down in oil in 1 second. All right, I wouldn't be buying this, not with your money. All right, if you were already long a lot, like an institutional trader, somebody who's managing pension funds, ETFs, mutual funds, what would you do? If you're not going to sell some of your long position, you're going to short to hedge your underlying exposure to the S&P 500. So if you're not selling a long, you're still selling to open a short to protect the downside. And so this is what happens, a dynamic where there's no bids. All right, nobody's looking to buy. There are no bids in the market. If there are no bids below, we're going to trade as far down as it takes to find buyers, willing buyers to put limit orders on. All right, or actually market orders to buy a market, because at the end of the day, it's the only time we trade is when the price gets to the market level. So if we don't have any market buyers for 60 points below, because that's how afraid people are overnight, we haven't been able to trade down. So we haven't had a lot of the selling go through. It's impossible. We have 13.3 thousand on the offer at the moment. All right, because that's where we're stuck. And so if you want to get out of a long position all night, since about 9 a.m., you've had a few chances before that, but from 9 p.m. rather, until now, if you wanted to get out of a long position, you can't. And you're waking up this morning and you're realizing that, and you're going to get more desperate to get out because you haven't been able to. I've long contended that these circuit breakers are nonsense and actually cause more panic and fear than they do help. All right, because if you open up right now, for example, 2% down, your limit down again. So 15 minutes, you can't do nothing. If you open down another 5% from there, your limit down again at the 30% circuit breaker. So you're not able to get out on 7% drop off of this level because there's just no activity. If there are no bids, you can't get out of a trade. In order for you to sell, somebody's got to be willing to buy. There are no market makers in the ES futures. So what's causing all this craziness? Well, it all started, first of all, coronavirus is spreading more, but it's all about OPEC. All right, on the weekend, Saudi Arabia, they're armed, the refinery called Aramco. You guys might have heard about it. They did an IPO a couple months ago. That's down to pre-IPO prices as of Friday. But anywho, Saudi Arabia's Aramco emailed their clients or sent them a letter saying we're going to discount our oil price by $7 to $8 a barrel to the U.S., the Far East, and other consumers, trying to take market share away from Russia, because Russia said we don't want to be part of this OPEC plus production cut deal. The thing fell apart. The June meetings canceled. It's basically an all-out price war initiated by Saudi Arabia. On top of that, they said we're going to boost our maximum production up to 12 million barrels a day, which is full-on output supply, and it's pretty much a race to the bottom. Prices are going to get cut as more oil is supplied, and demand is dropping because of coronavirus. It's a very historic, unprecedented double-sided or double-edged sword, because there's less demand and there's way more supply, and now people are going to be fighting to even sell more barrels. Because even though the price of oil right now is below what it takes to balance your budget as a nation, you still need to have sales to pay your expenses. Doesn't matter you're running at a loss, you need cash. Cash is king. This is why gold was up to above 1,700 and then it dumped to 1,660. If you're panicking and you're afraid, you want to sell the market, you value cash over being in gold, being the yen, being the Bitcoin. None of that crap matters. When a recession happens, I'm not using this word, the fear monger. I do think we're today, this week is going to be the transitional week. If we open up today nasty and it forces people to liquidate, you're going to see a lot of downside. All right, we could see the 20%. And I'll tell you guys why, because for the first time ever, all right, since markets, algorithms were around in 2008, but not to the scale they are today. All right, a lot of the volume's happening on the electronic front. This is the first time we're going to see what it looks like to have algorithms programmed on the sell side, rather than buying the dip every single time. All right, so I'm not trying to get you worried. I'm trying to get you focused so you could do something about this. 10-year Treasury yield down below 0.4% for the first time in history. 1 and 30-year yields are below 1%. All right, so there's a lot of, there's a lot of fear in this market. VIX right now is up to 2011 highs. All right, of September of 2011. So that's a 9-year high in the volatility index, which measures fear. So the fear is real. Coronavirus didn't cause this downside. Coronavirus ignited already a room full of dynamite sticks, and now we're just seeing the fireworks. S&P 500 has been pinned limit down since 10 p.m. I've never seen this. I've traded for 20 years almost. All right, never seen it pinned for a whole session on limit down. In 2008, though, it was more trading options than futures. All right, so it could get hairy. Oil price war in a time of lower demand and an oversupplied market. Coronavirus escalating. All right. And a Fed rate cut of 50 basis points does virtually nothing to stop this. And a potential loss of confidence in the Federal Reserve from the stock market. Those are a lot of factors starting to weigh down. So when you look at markets across the board, in Asia, Japan's down 5.4%. Hong Kong's down 4.2%. China's down 3%. India down 5.2%. In Europe, where there are no circuit breakers, London down 6.4%. Paris down 6.6%. Frankfurt down nearly 7%. All right, in the U.S., everything's down 5% across the board because it's all limit down. Dow, S&P, Russell, NASDAQ, anything you can think of in the US is limit down at the moment. We can't trade below 19 on the ES until 9:30. When that limit gets released, I think we're going to get a little bit of a wave of panic selling. If you could get on it early on, great. If not, you're going to have to wait for a little bit of rebound. And I think we may not get a rebound. So it could be one of those free fall days. Be very cautious. The only thing that could save that is if we see the PPT. And I know we laugh. It's not actually called the PPT. It's called the Working Markets Group. And they actually do buy futures in the open market with government money. So we're going to see some of that. But can they hold up an entire class of asset managers that's been complacently long for almost a decade because the Fed's got their back, and now suddenly the Fed doesn't matter? I think in order to get out of this one, we need the Fed to release a massive stimulus package. Fed's Rosengren on Friday said they want to buy diverse assets. Read between the lines. They want to buy stocks. If they start buying into the stock market from a Federal Reserve level, they could print money. There's a chance that it stops here and we form out a low. All right, but there's going to need to be another emergency response. 50 basis point cuts didn't matter. How much more do we have left to cut? 1%? Do you think a 1% cut is going to be the difference maker in this? All right, so this is what we're looking at, and it's a very interesting dynamic. You're witnessing a historic moment. We're going to be in the trading room today. If you sign up, you can trade with us for the next little bit. All right, you need to be around a group of pros in this kind of environment. I'm telling you guys, I've seen the retail experience in these markets. It's not good. That retail experience is what motivated me to be here and to be in this capacity with our team at TradePro to help you guys through this moment. So I appreciate you. All right. Crude oil is down almost 30% off of the open. We hit 30 even. I don't think we broke the overnight low of 30. Let me double check. Oh, man, we did. We went down to 27.34 on crude oil. So we exceeded the 30% drop, the fastest decline since the Gulf War in the early 90s in crude oil. All right. Gold's down 0.4%. Bitcoin's down to under 8,000. All right. And nobody's going to, look, not nobody, but people are going to be reluctant to buy Bitcoin when everything else is selling off. When gold, your traditional safe haven, the yen aren't going up as much. What this is telling you when assets that traditionally go up when markets drop is that money doesn't care to be invested right now. Cash is king, and it could stay in cash. So be very careful. Very little news on the economic calendar today. Mike Pence, Vice President of the U.S., is holding a conference call at noon. It's going to be with the government. It's not going to be with us, with governors in Situation Room. We could get a report after that. So look for a midday announcement of some sorts. I remember Mike Pence is taking on the coronavirus situation, and he was literally shaking hands and sneezing on himself throughout the whole thing. But, that's whatever. I can't blame the guy. I need to sneeze once in a while, too. Circuit breakers in effect. The circuit breaker levels on ES are 27.64. We hit that. We're freeze for 15 minutes, 13%, 25.86. We freeze for another 15 minutes. We hit 23.78 today, and the market pretty much stops for a day. All right, be very careful out there. It's unprecedented time, and this is the moment at which 2007 got really hairy. All right, we're very close to that moment. I don't want it to happen. I'm praying to the universe that it doesn't happen. I don't want to see people get hurt, but it's got a really dark feeling to it. All right, so be careful out there. We're going to trade this with our room right now. We traded last night. I was up till about midnight trading this. And, be safe out there. And remember, how many contracts traded so far? 314,000 contracts have traded. We should be at about 600,000 to 700,000 this time. So there's about 400,000 contracts that are going to release on 9:30 open. Look out. All right. I don't know how much the gap's going to be. We're going to gap down. Love you guys. Be safe. I get all these comments on YouTube. Good. Everyone's saying do not buy. Smart. Ghazi, I'm really sorry. That looks beautiful. Arabic. I can't read it. And the one person that could is no longer a trade pro. Business is coming to a standstill. Stage 3 apocalypse, coronavirus. You think the contract rollover later this week might affect the price as well? Yeah, Matthias, that's actually a very brilliant point, Matthias. I'm happy I read these comments because that's a great point. Everyone has great points. But there's going to be some rollover as well as we enter the June roll forward. All right, the third Friday, March futures expire. We go to June. We go to the M from the H. All right. So yes, I think there could be a factor of that. But then the H, they might sell the March contract, but not buy the June. So you're 100% right, Matthias. That might be exasperated to the downside as well. People closing out contracts that are going to expire. There's virtually no chance they come back before the March expiry at this point. So why not dump them? So there's another seller that comes in on the offer. Very smart and acute observation. Very proud of you. Dimitri, yes, we just talked about that. SPX and ES is halted. You're welcome, Ad. You're welcome, everyone. Trader Walt, I agree. Can we put in blind limits? I think that's a joke, Ramy. Buy toilet paper, says John. You guys are hilarious. You guys have a good day. Let's get into it because we have an open coming up. And I know I talked a little bit longer, but it's warranted today. Be careful out there. All right. Be safe. Manage your risk. Trade TradePro. Today's not a day to blow out your account. Today's a day to follow risk management rules even more with discipline. Love you guys. Have a great rest of your day. See you tomorrow. Take care. Goodbye. Trade pros in the room. Let's open it up. Do some quick analysis on oil. Get back to the equity front. And let's see how this open unshakes this limit. Limit off comes, the 5% limit comes off at 9:30 a.m. on opening bell. Let's have a look at